Hey folks, welcome back to the channel. This is a quick update for my SPY options challenge. After this week, there are only 2 weeks left for the year and then the challenge will be over. So I'm looking forward to that. But this week, I am actually down $96. It just wasn't a very profitable week trading wise, especially the first 3 days. I lost a bit of money on Monday, lost more on Tuesday. Wednesday was another loss. But then Thursday, I was able to get some back, made $56. And then Friday, I made $78. So even though Thursday and Friday were up days, it wasn't enough to put me in the positive because Monday through Wednesday were pretty big losses. And I think the reason was because I overtraded. Like if you see on Tuesday, I put in like 9 or 10 trades and they were all roughly around the same strikes as well, from 462 to 464. So I should have just put my trades in, waited, and see what happened. In any case, the SPY did really well last week. It was up almost 2%. So SPY is at a new high for the year with a really good 20+% return so far. Let's see if it stays up here for the rest of the year. In any case, let's go over my trades for Friday, which would be over here. And I pretty much just did a couple of trades here, one at 942 and another one at 11. So the first trade I made was a bear call because I was bearish on the market. And then the next one I was bullish. So I sold a put with a 468 strike. So the first trade was bearish. That was this one here, bear call spread. And I was bearish here because you can see the market was having trouble getting past this red line, which is the 50 exponential moving average on the 5-minute chart. So when I saw this red candle over here and it was pretty big, that was a very bearish signal that not only did it fail to go above the red line, but it also had trouble going over the blue line, the 21 EMA. And then when it broke down past this previous support area over here, I thought there's a good chance the market's going to continue dropping. So I did my bear call spread over here with a strike of 470 and I bought, I think the 471. Yeah, just in case it goes up. And the market finished at 469.33. So I made all of the premiums and I did not have to close my bear call positions. So I waited for the market to go down and do its thing. And pretty much that's what it did all the way until over here. You see this green candle went above the green line, which is the 9 EMA. And because of all of these wicks here going up, these are bullish signs that whenever the market went down to this level, around 468.50, a lot of buyers came in and was able to push the market back up. So when it finally broke through out of this consolidation range and above the green line, I decided to put a bullish trade here by selling a put at 468. So that's like down here somewhere. And as long as the market doesn't break below this support line, then I'll just hold on to this put. Because similar with over here, the only reason I got in and was bearish on this trade was because the market broke down through this previous support level. But if it doesn't break through this support level, then there's a chance it's going to go up instead. So I held my short put here and the market finished above 468. So that one also expired out of the money. And that's pretty much it for Friday. In terms of next week, well, if we take a look at the daily chart, you can see that this is quite bullish because all of the EMAs are heading upwards and the price is above all the EMAs. However, we did get this red doji over here, which could signal a reversal in the trend. So if on Monday the market closes lower, then there's a good chance that for the rest of the week, it's not going to go higher than the previous close on Thursday here, which is 472, and it'll try to touch this green line here, the 9 EMA. Either the green line will come up and meet it, or the price is going to go down and touch the green line. But if Monday we get a really bullish day, especially if it closes above 472, then this upward trend is most likely going to continue, and it's likely we'll get higher prices by the end of next week. There are only 2 weeks left in the trading year, so it could try to go all the way up to 480, like the all-time high for the markets. But next week will be quite telling on which direction the market's going to go. Because if we look at the weekly chart, you can see that this is the 7th week that the S&P 500 is up. These are weekly candles. And what's interesting about this last week is that we have a really big wick on the top side. And usually when there is a sequential up run where it's just been up week after week after week and there's a large wick on the top, the next week tends to be a down week. So if we look back through history here, back in May of this year, you can see we had 1, 2, 3, 4, 5 green weeks in a row. But this last week here, There's a pretty substantial wick on that one. And then the next week was a down week. Same thing over here in March. We had 5 weeks going up with a larger wick on the top than the bottom. And the next week, it was kind of flat, but it was still a down week. So although on the daily chart, it looks like everything is still moving up because the price has not crossed below any of the EMAs. On the weekly chart, based on previous patterns we've seen, it's more likely than not that this upcoming week here will be a red week just because we had a huge run up, multiple weeks going up, and then the last week here we had a big wick on the top and no wick on the bottom. But again, I think it's going to be wait and see because on Monday, if the market moves up, then we could get an 8th green week, which is pretty rare. And if Monday is down, then we'll most likely see a red week, following similar patterns in the past. So that'll do it for now. Thanks a lot for watching, and I'll talk to you in the next one.